Hey guys, this is Mark Shawson. I'll be starting this in just a few minutes. Just give everyone a chance to check in. So welcome to the webinar. I'll be starting in a few minutes. So we've got well over 100 participants thus far. Great turnout, so fantastic. So Sarah says, super excited. The scientific bit really caught my attention as I'm a scientist myself. So Dick, great to see you. Dick Mast is a longtime member, so I guess he's a glutton for punishment and back for more. So great, as always, to see you, Dick. So I'm a little confused as to what is going on here. I can't seem to see the taskbar. So I'm not sure what is happening here. Okay. So I'm going to share my screen and we can get started. Sorry, I'm having a little bit of difficulties here. Okay, there we go. So welcome to today's webinar. This is a 4-day live trade execution series. I always get the question, is this live? I took my pulse this morning, so I'm sure I'm here. This is live as a heart attack. I've kind of subtitled this how to capitalize on monster moves in the markets. My name again is Mark Shawson, the pattern trader. So for some of you who don't know me, I'm just going to kind of digress, give you a bit of an introduction, a little bit of a background on who I am and how I got here. I've been trading for more years and decades than I'd care to remember. Started trading when I was like a junior, senior in college. I met this interesting fellow who was an investment banker. So at the time, my father was looking for money for a theme park. It was called Lion Country Safari. It's still actually up and around. And he went to an investment banker, to raise some money. And the investment banker was a guy named Graham Loving. I literally couldn't make that name up. And, Graham was a very interesting guy. He wore an eye patch on one eye, very intelligent guy, very quiet guy, introspective guy, rarely spoke, but when he did, it was very powerful. But in addition to his activities as an investment banker, Graham was actively trading the commodities futures markets. I'm talking about orange juice, live hogs, cocoa, treasury bills, gold, soybean meal, corn, about 22 different markets at one time. And it was really intriguing me because right around this time, I was going to one of the best business schools in the country, USC, University of Southern California, a private business school in Los Angeles. And I was learning how to evaluate investments based on what we call fundamental metrics. So typically, if you look at a company based on fundamentals, you'd look at the price earnings ratio, you'd look at the sales, to inventory turnover, you would look at the management team, you'd look at the balance sheet, on and on to make an investment decision. And that's how, I came up, trying to understand the investment market. So when I met Graham, not only was he making a ton of money, but I was really intrigued on how he was making it because he just had these very crude charts. So we're talking about 1979, 1980 period where the commodity markets were on fire. This was when interest rates went to 21% for the first time. Inflation was on fire, oil embargo. So pretty reminiscent of some stuff that's going on right now. This was the first time that gold ran to $1,000, silver ran to $50, pork bellies, corn, soybeans were going, to the moon. And Graham was just making money hand over fist. And, again, as a sophomore in college, I was, just mesmerized by this, but it wasn't only how Graham, the amount of money that Graham was making, but how he was making it. So he had these, crude, pieces of graph paper, and he'd just draw an X and Y axis for, price and time. And, then he live hogs, orange juice. And then he would, every day he would just chart the close of, these commodities. And over 3 weeks, the line would be going up or be going down. And I never forget this. He says, Mark, I simply want to buy a market that's going up and sell a market that's going down. And to my simple mind, this had an enormous appeal on me. And so since that time, I have thrown all of my time and effort into studying just prices, price patterns, price action. I'm a very visual person. I'm a very aesthetic person. I love design. I love architecture. I love landscaping. And so I, see the markets completely from a visual standpoint. People always ask me, do I trade the news? And the one word answer is no. I look at how the market reacts to the news. So to me, price is the news. The market is a discounting mechanism. The price is ahead of the news. And I've been trading 40 years and it never ceases to amaze me how there could be a tsunami outlier that, hits Japan. And meantime, the yen was already putting on a top pattern like 3 weeks before. And when the tsunami hit, the yen would just, crash. Or, how news would come out on a stock, great earnings, but, months earlier, you could see this accumulation pattern. So to me, all I look at are the patterns, the tea leaves in the markets. To me, the market actually points in the direction it wants to go. You don't have to have a degree from MIT in engineering. You don't have to be, a genius, and I'm proof of that, to make a ton of money in the market. So, over the next couple of days, I'm going to discuss with you my price pattern, price action trading methodology. Now, hopefully my team sent you something before the webinar, the scientific trading method, which should include certain basic patterns in there. So you should already, have an understanding of some core patterns. And frankly, just armed with a handful of patterns, you can make a ton of money in the markets. So, I'm very transparent. I show you guys exactly what I'm doing, make or lose. So, in these webinar series, I show you what I'm doing every day in the live markets, real time. So this is not theory. This is not education. I love kind of giving back and doing the pattern trading. People ask me, well, if you're making all this money, why do you do this? I actually get a lot of gratification about giving back And, I get to meet people from all over the world. Just last week, one of our oldest members, Prashant, called me up and said, look, I'm in Florida, I'd love to meet you. And we got together for a cup of coffee. And, it's those kind of, things that, give me more gratification than, trading the markets. Some of our members have been with me years and years. I get to meet them, and it's just a phenomenal experience. But, I am a trader first. I make way more money in trading the markets than I do in this business. And, so I'm going to show you, exactly what I do. And then I'm going to, discuss why I do it. So here are some positions I had coming in today. So some are very aggressive, where, I buy put or call options. So this was a put option. This is a bet on the downside in a stock called BYND, Beyond Meat. I bought these last week. Bought the hundreds that expired this week. So it has to go, south or below 100 for me to make money. And I bought a ton of these. I put 130,000, and you'll see I did this in the same account. So I've got $250,000 betting that Beyond Meat is going to close below $1 by the end of this week. And today they took it up despite the market crashing, and I'm down 40,000 or 40,000 on that position just today. And then I've also bought the puts in the QQQs, which is a proxy for the NASDAQ. I'm betting that the NASDAQ is going to go down. You can see I made about 20. I bought some of these on Friday, and then I bought some more into a rally today. I've got a heavy bet that the stock market's going to go lower, and I'll explain why. I've also been short Facebook stock. You can see I've got a $763,000 position in that. I'm up about 15 grand there. And then I'm also short this stock, RBLX, which is Roblox. So that's in that account. I have another trading account where I'm also short the QQQs. I got short on Friday, and making just a slight profit. Actually, it's probably more than that by the time the market closed. I'm also long these put options in BYND. So I've got like 1,500 put options, which is equivalent to 150,000 shares short in BYND. So I'm going to explain why I'm so bearish that bet. They did some kind of funny games today. I don't know how they held it up. Probably because I have such a big position, they want to squeeze me. And then I have 5,000 shares short in this account, so about 8,000 all told in Facebook. And then I took a bet on an earnings play in HELE, Helena Troy, and it closed a little bit against me, but it's making its way to break even. So I'm up about 26 grand in this account, up 7 grand in the other account. And then in my FX trades, I'm short gold at 1781. It closed at about 1754. I'm long the pound New Zealand. I bought at 196.77, and it's slightly lower. I also bought the dollar yen and the pound yen, and all told, I'm up about 90 grand in my FX trades. So I'm just going to show you some of my prior trades. So we have members on our lists all over the world, and so I'm just going to show you communications that I've sent out prior. So this was a stock in QuantumScape, ticker symbol QS, to sell it at $40 based on this bear price pattern. Today, QuantumScape is trading at $23 in the live market. So this was last April, and 6 months later, we're half that. And I was up about $400,000 when I shorted it right in this area. I'm going to show you, how I look at these patterns, how I look at the price action. And so you can see I was making 300 grand on a bet in QuantumScape in that period of time. I bought put options in QuantumScape, and I was up 54 grand in that. And you can see I bought put options in here. I was up 282% in those positions. This was an event in Beyond Meat, despite the fact that I'm very bearish this stock, and I'll explain why. There was an area where I thought there was what I call a bear trap, where it dropped under a pivotal area. And I thought this was a play that, was going to spring quickly to the upside. I said, Beyond Meat is taking a U-turn. I said, this could rocket higher very quickly. I started buying the stock at 120. I also bought the call options, and I made over 7 figures in that bet. I bought 5,000 shares. at 120. You can see here it was 139.5. I had 5,049 shares. I was up 83 grand in the stock. And then I bought these call options at about $1.50. They eventually went to $23. And I made just an incredible amount of money in just 3 days. So I bought these, options in another account. The 125s at $1.50, and you can see here they were trading at 19 bucks, and I was up over 600 grand in this account, 400 grand in that account, and made a pretty nice score in just 3 days. This was a trade set up in pound New Zealand. We had a buy stop there, a buy stop there, and ended up making 140 grand in that period of time. This was, in about 3-4 months ago when, gold was still around 1,900 bucks. And I said we were going to go below 1,700. Gold ended up going below 1,700 to 1,687. I had 2 positions on. Here's another one, and ended up making that amount of money. So incredible as it may seem, I send, these are all emails that have gone out to, members around the world. So it's not something that I concocted for today's presentation. I'm on record. Thousands of members around got all of these emails at the same time I was trading them. So this was back in January, where I was buying the stock of Lyft, LYFT. So I'm showing you stocks, Forex, gold. So I trade every asset class under the sun. If it has a high, low, and close, I will trade it. So you can see that I was looking at what we call a double bottom bullish price pattern. We had an inside day bar, and I said at the time, I'm personally long the common stock of Lyft and the call options, the 46 options. I was also long the 47 options, and made over $250,000 on this trade. So you can see, unfortunately, my broker statements are not as nice as Forex brokers. They don't, show the P&L that. So here's where I was buying the stock at 45.68, accumulating. So I bought 7,500 shares of Lyft for around $46, blew it out at 58, made 90 grand in the stock. You can see I was buying these $46 calls for 92 cents, and I blew them out for $7. So I made, it says I made, sold for 6. I actually sold for 7. I made 750% in just 3 days in those call options. And then I also bought the 47s for $1.10, and I sold them for 6 just 3 days later. So made 500-600% in just 3 days. So this is how I use price action to project moves. And I, if I'm very speculative or aggressive, I'll buy a call option. A call option is a bet on something going higher in the stock market. A put option is a bet that something's going to go lower, and it's highly risky. If you buy these options, you have to be prepared to risk some or all of your money. So let me kind of discuss why I got in some of these trades. Just to recap today, these are my trades. I'm short Beyond Meat. I'm long these put options, which means that I'm short the triple Qs, which is a proxy for the NASDAQ. I'm short Facebook, and I'm short Roblox. So I'm just going to kind of discuss why. And again, really what I'm trying to impart over the next couple of days is the methodology, where whether I lose money or make money, not that it's irrelevant, but it's the methodology. And over time, I make a ton of money. So this week, you could see me lose a lot, but that's just the way it goes. I don't pretend to make money every day or every week. I'm just looking for sizable moves. So really what distinguishes my trading methodology from, I think, anybody else under there is that I'm looking for sizable moves, and let me kind of give you an example. Most people trade the FX market for, a couple pips here and there. They try and carve 7 pips out of here and 20 pips. I'm looking for 300-400 pips. I won't even get in an FX trade unless, I can see my way to making a sizable move. So I bought this pound New Zealand, the British pound versus Japanese yen, and I'm looking for a 500 pip move on this thing. I'm not getting out just because it's up 80 pips in my favor. So that is, I'm looking for setups that translate into moves, whether that move takes place over 3 days or 3 weeks, but I'm looking for the bigger moves in the market. And I'm going to talk about risk management. I'm going to talk about expectancy and why most people are losing, because they're setting up trades that are not designed to make you enough money. So if you're just, trading for 15 pips and your stop loss is 15 pips, you're basically have, well, I'm just going to get into it now and I'll expand on it tomorrow. I'll show you a tool to manage your trades. But, if you're trading for 10 or 15 pips and your stop loss is 10 or 15 pips, then you have a one-to-one risk reward relationship, right? So you're trying to make 15, you got your stop loss on 15, and that's a one-to-one. But, you also got to include the 2 or 3 pips that your broker, is charging you on the spread. So actually, if you're looking to make 15, you actually need to make 17 to factor in the spread. But whatever way, you have to be 80 or 90 or 95% correct on your trades if this is how your trades are set up, where every time you win as much as every time you lose. So you have to be right about 90% of the time. And it's just not sustainable. So that's why the statistics in Forex are so bad. It's estimated that north of 90% of people are losing their money in the first 3 months. And it's because they're trading on too short time frames, and their expectancy, their outcome, is too small. So actually, let me share with you an email that I sent out just yesterday to give you an idea of, and I should have had this open. I apologize. Let me just get rid of my email here. So this is my email that went out yesterday. Kind of went in, I'm short, beyond and on and on. And this is one of the things I'm looking at, the dollar versus the Japanese yen. You can see my, stop loss was about 180 pips away, and people say, well, I can never take 180 pip risk on a trade. And you're right. If you take the size trade you normally do, you can't, but I'm going to discuss position sizing tomorrow. But you can see that my take profit, my entry is 112.35, and my take profit is 600 points away, 650 pips away. So nobody trades with that kind of time horizon. And frankly, if this starts moving toward 118.70, I will keep moving to take profit. I won't stop it from making me more money. So I look for big moves in the market. You can see I had a sell stop in gold at 1747, and I'm looking for a move at least $40 away. But frankly, if it starts cracking toward the 1700, I'll keep moving that take profit. I won't stop it from making me more money. And this was my open profits. So I had Beyond Meat. I've been short since 119.75. It closed last week at 100. So I've got $19 profit in that, on and on. So, I just put, the moves in pips. There are, stocks don't move in pips, but I just try and create a comparison. I'm up $12 in this position on a weekly trade in BYND, and that's what my email looks like. So what I'm saying is that I'm looking for this. I got long pound yen also yesterday, and I'm looking for this thing to go up, to 170, 1500 pips or something. Well, let's say my first take profit is, 400 pips away. So I might set up a trade where I'm risking 150 pips, but I'm looking to take out 450 pips. So instead of a one-to-one relationship, I am looking for a 3-to-1, where my outcome is 3 times larger than my risk. And so if you can set up your trades with a 3-to-1 risk reward, where your outcome is 3 times larger than what you're risking, you can actually lose 72% of your trades. So this kind of blows people away. People always say, well, what's your win-loss ratio? If I told you my win-loss ratio is 80%, you'd say, wow, you're pretty good. But if I told you my win-loss ratio is usually about 48%, you go, well, I'll maybe go find somebody else. but it's the size of my winners versus the size of my losers that puts me, enormously in the plus column. So hopefully that is somewhat understandable. I'm going to talk about risk reward tomorrow. So let me just kind of discuss a couple of charts today, why I'm thinking what I'm thinking, why I'm looking at what I'm doing. So this is the QQQs, and it's basically an ETF that tracks the NASDAQ. So if you want to trade the NASDAQ, you don't know which, stocks to buy, you could just buy the QQQs. But, if I want to, if I think the NASDAQ is going to go down, I'll buy what's called put options, a very leveraged bet, a very gambling bet that this thing's going to go lower. So you can see that on Friday, I actually sold these things right here. I bought puts on Friday right there, and then it closed lower. And then today, we opened lower, and I was making a whole bunch of money on the, on the opening. And then it rallied really hard. So after the opening, you can see it rallied really hard. But by the end of the day, it closed right on the low. And that's why I'm making about 50 grand in these options thus far. But why did I have the confidence to sell? Why did I have the confidence to hold despite the rally today? Because I trust the overall pattern. So, you can see that we've had just enormous back and forth kind of volatility. And I've been telling our members that, even in here, it's just going to be really volatile. But that's why you kind of have to keep your eye on the picture and really what's happening. I always say the market's like a magician. It hides its intentions. So, just like a magician doesn't come right out on stage and pull a rabbit out of the hat. Always kind of does a magic distraction over here. So he's distracting you with his right hand while he's pulling the, the rabbit out of the hat with the left hand. And so to me, this was just a distraction. You see the market's going up, but I was selling into that. I was buying puts into every piece of that rally. I made a lot of money on Thursday, made a lot of money on Friday, and I'm making a lot of money today, anticipating that we're going to go there, and I think we're going to go there. Now, what about this, informs me that that's the case? It's really the patterns. So again, you should have been given a booklet on basic patterns, but here is kind of what I call an asymmetric double top. So double top is just what it sounds like. You have one top, you back off, you retest it, and when you look back, you have what looks like a letter M. But it's a double top. There are two tops in the same place, and that is a reversal pattern, meaning that leading up to that, the market's going higher. And if that's a reversal pattern, it means after this is, consummated, then the market's going to go down. Now, this is a perfect double top, but we can get asymmetric double tops where one peak is maybe much higher than the other peak, or, one peak could be even lower. And even though that's lower, when we look back, that still looks like an M top. So, it's kind of hard to kind of see in the weeds here. I've got a lot of experience doing this, but to me, here's the one top and here's the other. So this looks like an M top to me. And now we are dicing through the neckline. So the neckline is simply a line that is drawn throughout the entirety of the pattern. That's called the neckline. And you can see sometimes you break through the neckline, and typically you have a retest. And then when you break through again, and certainly if you get below here, then it's confirmation that this is ready to go. So I look at a combination of patterns and price action. And what I mean by price action is, I refer to these as my insurance day bars. And when I see an insurance day bar, it kind of tells me where to get in a trade and what my risk is. And so my definition of an insurance day bar, and again, I'm going to, kind of give you my book later in the week, and it'll explain this in detail. An insurance day bar is, let me pick a different color. It's simply an observation of how prices close relative to the high and low. So that's, people always ask me, why do I not trade candlesticks? Most people trade candlesticks. to me, these bars kind of tell me, they point in the direction they want to go. So if a bar closes on the high after going lower, it tells me that the risk has been taken out. This thing was try to go lower. By the end of the day, the buyers were in control. Now, I don't look at these reversals in a vacuum. I look at that key reversal if, the market was going higher. So you can see in an up market, here was a key reversal. Made a new low, closed at the high, was pointing higher. Made a new low, closed at the high. 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 Made a new low, and went higher. Okay, so that was in context with an uptrend. So like I said, I don't look at these bars in a vacuum. You have to kind of decide what the pattern is and what the trend is. So now all during that period, that market was going higher. But now I see this bear price pattern, this double top. So now I go, aha, the market looks like it's turning. But instead of trying to figure it all out and get short while it's going here, I let the market tell me when it's ready to go. And you can see right here, we made a new high and closed in the low. So this is kind of a key reversal the other way. You make a new high and you close on the low. So market tries to go higher. By the end of the day or the week or whatever time frame you're looking at, the sellers are in control. So you can see that was on Thursday where they try to take it higher. And by the end of the day, it closed right on the low of the day. The sellers were in control. Then on Friday, same thing. They took it higher. By the end of the day, they close it on the low. And same thing today. So these bars start pointing in the direction that the market is likely to go. So we don't have to figure out what's Jay Powell going to do, on inflation policy. What is the implication of oil on the market? I just look at this picture and this price action, and a picture's worth 1,000 words. Now, in addition to this double top, I also see emerging another bear price pattern in the form. Let me kind of get rid of some of this distraction here, of a head and shoulders. So head and shoulders is just, again, what it sounds like. It looks like a man or woman's left shoulder. The higher peak is the head. And then you have a right shoulder. And now it looks like a man or woman's head and shoulder. Just like the double top, this is also a bear price pattern, meaning that the implications are once it penetrates this neckline, it's going to go lower. So now we have two patterns, the double top and the head and shoulders, in the same area. So here's the left shoulder, the peak is the right shoulder, this is the head, and this is the right shoulder. And so, one neckline comes in right around here, and then the more conservative one comes in here. And, should we come and penetrate this, it then would confirm this head and shoulders, and then we're likely to really have a push lower. And I do think this is what is going to transpire. I think that there is going to be a huge kind of washout here in the NASDAQ. So again, the way I bet it is that I buy these put options, which is a very, very dangerous thing, because I'm betting by a certain time that something's going to happen. And like Beyond Meat, I lost a whole bunch of money last week. I was correct about the stock. I was correct about the move, but I was incorrect that it was going to happen in that time, and I lost a whole bunch of money. Hopefully I'll make it up this week. I'm losing a bunch of money today. So we'll see what happens. But again, this is all I look at. So the stock market is filled with, there's a screen behind me of analysts talking all day long about the implications of, the supply chain shortages and, just everything that would make your head spin. And I would counsel you to stay away from listening to all of those geniuses, because the market is always right. My saying is the market is always right. All you have to do is follow what the market is telling you. Easier said than done. Today, market opened lower and, opened 200, Q pips lower. and then, went up 300 pips. So it went up on a 500 pip rally, which is a huge intraday rally. But I held on to it, and I actually bought more puts into this rally today, anticipating that we would end up lower and going lower. So, Wayne Gretzky, the hockey player, one day there was a game, Edmonton Oilers were playing, and the stadium lights went down. And so the broadcaster in the booth said, I'm going to use this as an opportunity. I'm going to go down to speak to Wayne Gretzky. And he sticks a mic in Wayne Gretzky's face and he says, Wayne, you're not the strongest guy out there. You're not the fastest guy out there, but how come you're able to, perform all this magic and, score all these goals and, outclass, people who look better than you? And, Wayne said something which, is so profound. And I think especially with regarding to trading, he said, I don't, skate to where the puck is. I skate to where it's going to be. And so, trading gives you all of this misdirect. You can see that, Tuesday and Wednesday, you had this huge up move. But to me, this double top told me that that move was likely to be short-lived and we're going to go the other way. And so I was shorting into something that looked crazy at the time. I mean, the market was going straight up. And so to me, I don't skate to where the puck is. I skate to where it's going to be. And that's why I took these big bets that it's going to go lower. So that is kind of the triple Qs, an example of how I traded a bear pattern in the triple Qs. Now you'll find, so this is, one instrument, and whether you're trading corn or natural gas or orange juice futures or whatever it is that turns you on, I use the same price pattern, price action trading methodology. So it's a layered approach. First I determine what is the direction or trend. So this looks like in the last couple of weeks, it's been moving lower. Once I determine the trend, then I ask myself, is there a pattern? Here, there's a double top and a head and shoulders. Once I find the pattern and the direction, I say, okay, I'm going to wait at what I call my key reversal, my insurance day bar. And then, I say to myself, do I see that? Yes. Here you made a new high, you close on the low. And then I have a trade execution plan that then requires me to put a sell stop, underneath a market that I'm looking to sell or a buy stop in a market that I'm looking to buy. And so it's a 4-step layered approach that gets you closer and closer to the bullseye of a high value trading opportunity. And like I said, whether you make or lose, if you can see these patterns that have much bigger implications. So I think you're going to get a move like that. If you're right about that, all you need is 1 or 2 of these a year. I made 7 figures in February looking at a move like this in the QQQs, and it went down. These options went from 1 to 10 in 3 days. So I just look at these setups to make huge cuts in the market, to take advantage of monster moves in the market. So one of the things that I've been talking to my members for weeks and months now is, I've been short this stock, BYND. It's a ticker symbol for the company Beyond Meat, the alternative, hamburger or whatever you want to call it. And again, I don't have any gripe with health foods or what have you. Despite all the great news that has been coming out, from this company every week, they announce some strategic relationship. They did something in Ireland 2 weeks ago. They did something with school kids in Canada last week. All this great news keeps piling up, about this company. The only problem is, price just tells you that there's something wrong. The story's not lining up. Great news, but prices have collapsed from $200 to $100. And I think you're looking at one of the, greatest opportunities right now, because, markets go up and down, but it takes a while for them to get mature enough to get going. So this thing has been creating a top for many years now, and it's just sitting on a ledge waiting to go down right now as we're speaking. And so to my mind, I see a million bearish price patterns when I look at this. I mean, if you kind of look at this from a naked view, it seems kind of crazy. It's hard to tell, maybe this, is going to go up next, or maybe it's going to go down. It's hard to tell because it looks somewhat ambiguous, ambivalent price action. But to me, if you peel back and understand how to break apart prices, like I said, I'm very aesthetic, very visual. This is what I see. Just like the cues, here you have the left shoulder, the head, the right shoulder, and you have a head and shoulders price pattern right there. And then in the more recent period, you have a double top right here. And then if that weren't enough, I mean, this whole thing's a top. Then you also have a head and shoulders in this time period. And it's all connected by this common neckline around $113. And once it broke below, it basically confirmed right there. So once you go through these patterns, it starts confirming what you're looking at. And now you can see this thing is just really literally sitting on a ledge. I kind of like, tell my members that this looks like a circus act, like one of these trapeze acts. Only there's no safety net underneath there. So you've got some guy with one of these beams and there's nothing to catch him when he falls. There's just nothing under here. There's nothing till like $40. There's just air. So, they managed to hold this thing up. They held it up today, in a down market. Somehow they played games and held it up. But, you can run, but you can't hide. And eventually this thing is going to cave. And so I've been shorting it. I've been making a ton of money on the way down. And again, just like Gretzky, what happened in this period was we bottomed at 104 and then went to about 116. And right when it was about $114, I bought the 110 puts right there. So right when the market was going higher, I was actually buying these instruments that was a bet that it was going to go down. And right as I bought it, the next day, this thing plummeted from 114 to 107. It closed the week at 105. And so, the puts that I bought for $1 went, the 110s closed at 105, went to $5. I made 500% on those put options. And the same thing last week. We went to about 106 on Friday. And, as it was going to new highs on Friday, I was buying the puts for this week. Let's see if I'm right. Today I'm losing a fortune, losing about 80 grand in 2 accounts on that bet. And I could really get taken to the cleaners if I'm wrong. But I don't think so. The problem is I only have 4 days to find out. That's the problem with buying put or call options. So you can see this was the action on Friday. When it went to 105, I was buying the 100 puts. So into this up move, I was making a bet that this thing was going to collapse. You can see on the daily, we've just got this support, right around this area, but I do not think it will hold. Certainly not for very long. So certainly the better bet is to be short the stock. And that way you can just hold it, as long as you want. And here again, in this more recent time frame, we see an asymmetric head and shoulders. The only thing is the right shoulder is sitting below the left. So it creates, instead of a horizontal neckline, a drooping neckline. But the implications of a drooping neckline are not only is it bearish, but it's going to go down very quickly. And that's exactly what happened. This thing dropped from 135 to 100 after it pierced that neckline. So to me, I look at a combination of these patterns and then the price action. So you can see here are your key reversals right here. I was trying to find a color that's going to. So made a new high, close on the low, right at this double top. Made a new high, close on the low. So to me, you have that double top right here with that negative price action. You can simply put a sell stop there and you're into this trade. So here you have a series of what I call inside bars. So you can see Friday and today's action, the trading ranges basically sit or reside within this bar on Thursday. So you can see that these two bars are coiled. You know, I call them inside bars because they literally sit within the trading range, the high and low of that bar. And to me, a coil is like, it's a storing of energy. And then once energy is stored, you're trying to surmise which way is the energy going to uncoil. Kind of, I always make the metaphor to like a beach ball, right? So if you put your hand on top of a beach ball and compress it further and further underwater, and then let it up, let your hand off, what's going to happen? This thing is just going to uncork, right? Energy is just going to uncork. But because of the bear price patterns, I think it's going to uncork that way. So once the energy is ready to release, and the more it coils in here, tomorrow if we have another bar and it just kind of does that, it's just building energy. And that energy is going to unleash in the direction of the trend and the patterns. So again, here's where I use, jujitsu by understanding the patterns, the direction, and the price action to get in sync with, monster moves in the market. So I'm going to stop here and see if there are any questions that you guys have. And again, forget about this particular chart. I'm really trying to impart a methodology that you can apply to any trading instrument. So, that's what I'm trying to do. So I just want to see does this make sense to you? Do you think that this could help you in your trading? Do you think that it seems like a bunch of nonsense? What do you think? So instead of asking me to check other charts and other trades, really what I'd like to do is get some feedback, on what I've just explained to see if this makes sense to you or if you have any questions on that. So Jerry says, this makes perfect sense. So Stuart says, how do you identify exit targets? So Larry says, yes, it absolutely helps me. Dennis is making sense. So yeah, entry and exit, those are two different things. And again, stop loss and take profit is a very difficult discussion, not because I don't want to explain it. It's just because every setup is different. But when I'm looking at this chart, I really can't see how this is not going to go back to 50 bucks. I think this stock gets cut in half. And certainly I think maybe the first stop is this guy right here. So you can see there's, a bit of support right there at about 80 bucks. So that to me, if it pierces this would be kind of my first objective is the low 80s. Maybe you get a pivot off here. But frankly, I think this is coming right back to these lows. So I look at the pattern and what the pattern is telling me about, how big the pattern is. Some patterns, I'll take for a couple days spin. This, I think you could be short this stock forever. I mean, I think this is going to go back to 50 bucks because this whole thing, this double top, this head and shoulders, this whole thing is what I call a distribution. All of these prices are basically sitting on top of these two guys right here. So you got 2 years of selling on top of these two guys here. That's like kind of a tug of war with 300-400-pound sumo wrestlers on one side, and then 2 90-pound Girl Scouts on the other side. Eventually, the thing's going to cave. There's no way that this thing, that all this weight. And so you can see this is the collective weight. I look at prices as a weight. It's like, kind of a table sitting on a one-legged or two-legged stool. Eventually it's just going to tilt over. And so some patterns, some charts, every pattern, every chart is going to be different. But this one is one of the sweetest charts I have seen in a long time. You can see when it broke this neckline at 160 bucks, after it did, it went down to 40 bucks. That's the import of those patterns. And I think you will go there again. You'll probably make new lows. This will be a $20 stock by the time it's all said and done. Sounds crazy. So David says, I see a clear positive beyond going higher. So, people say, well, this is a double bottom. It could be. This is certainly an area of support. They can continue to hold it. I don't think you see a huge chance of a big rally north of 110. I can't see something that sustains off of this. Certainly they could keep it around. This is a weekly chart. So, at the end of the week, the bar could look like this and, you could keep hanging around here. But I think it's not a question of if, but when this thing collapses. So Stuart says, any hints on developing emotional strength to hold the big losers? So that's just something that you have to trust the pattern. Like today, I was pissed. I mean, I had, huge profits right on the opening. I bought these Qs, the puts on Friday in anticipation of a move lower. And when you see this left hash mark, so this is where this thing opened right there. So I kind of sold them here and then they opened lower and I was making a bunch of money. And in about 2 seconds, it took it all back and went straight up. And I was losing a bunch of money. And so, look, this has been an up market. It's very scary to watch the market go against you like that. Here, I'll show you what this looked like. And so I basically trust the pattern. I held onto my short. I actually shorted more. So if you're looking at an intraday chart, and this is why I counsel you not to, it's hard not to get emotional. So you can see that it opened here and went straight up. And I was shorting into there just blindly because I was looking at the bigger pattern. If you look at a 5-minute chart or a 15-minute chart, you don't know which way is up or down. When I'm looking at this chart, I'm thinking, well, this could be a double bottom down here. This whole thing could be in a double bottom. So now it's taken off and now that looks really scary. But to me, that's why I look at the big picture. And, I think this is, going to go lower. So it's a hard thing to do, Stuart. I think whoever asked, you have to trust the pattern. So today I was losing a tremendous amount in BYND. While the whole market was going down, these guys were playing games and Beyond Meat went up to 103.5. I mean, I was getting hammered and I just held my puts. I held my short position and I just, I had a friend of me tell me this thing's, putting in a base here. I should get out. And I go, this thing has just no pattern. It has no price action to support a big move out of here higher. So I'm sticking to my guns. We'll see how that works out. Richard says, what is a validated pattern? So a pattern is basically something that confirms itself, right? Where it goes through what we call the neckline. So you see these double tops, and sometimes it could look like a double top. It gets here and then continues going up. So it never validated itself. But by dropping through the neckline right here, this kind of validates it. Where it dropped through, now this is a retest. And certainly if we make a lower low, this tells you that it's on, that this is now validated and we're likely to come back to the beginning of this pattern right here. And so the patterns validate you. Now, sometimes you get fake outs. There's all kinds of times where the market looks like it's putting on a double bottom. Here's one top, here's another. Why isn't this a double bottom? It kind of comes down, but then it never comes down to here before it starts taking off again. So it was not a double top. Here's a double bottom right here. Here's the neckline right there. So it broke through, retested the neckline, and then went in the direction indicated to you by the pattern. So Arturo says, do you think buying an option that expires in 6 months more is a good trade? It is. The problem is the more time you go out, the more expensive it is. So you start losing that advantage. So I think 6 months out, Beyond Meat will be a lot lower. The problem is you have to pay a lot more. I like to pay around 50 cents, $1, $1.50 for options. If I chose a Beyond Meat option, whatever, we can look at it. So Beyond Meat, we can look at the option chain and we can go out, several months, whatever, February of next year. And we could take a put that's trading at, call it 100. Let's look at the 85 puts. So the 85 puts for February, whatever that is, 4 or 5 months from now, cost you $4.85. So that means Beyond Meat has to be trading at 85. So you have to subtract the premium, the $5 you're paying from your strike price. So your break even is $80. So in this case, I think Beyond Meat is probably going to be a lot lower. Could be at, I don't know, whatever, 70, 65, 50 by then. I don't know. So you could make, 3 to 1 on your money. And, it's a bet you could take. But, I'm buying these puts so you can see, the 100 puts, which is only $1 away, is trading at $1.40. So what I do is I pay $1.40. So my break even is what, $98.60. So I have to believe if I buy these things at $1.40 that this thing's going to be lower than $98.60 by the end of this week. So yes, you can buy longer term, the more time you go out. And actually $4.85 for those puts is really not too bad. Sometimes in Zoom and Tesla that have very high beta, the premium is very high. And the more time you go out, you pay so much. And so you lose that leverage advantage, but you certainly can do anything you want. And you could always buy a put and then, sell an out of the money call and, kind of hedge how much you pay. So there's all kinds of things you can do. Jess says, would you place a trade today on a bank holiday? Yeah, I don't really care if it's a holiday. I just look if the market's trading, I'm going to trade it. Now, certain FX things, I wouldn't. There's certain events that, I would decide not to. But by and large, I just look at the chart. I don't care if, people say, do you go overnight with it? Do you go over a Friday? I don't care. I look at the chart. I don't know if it's a holiday. Most days, I don't even know what day it is. So Jerry says, this session has painted a clear picture of me and the importance of just understanding the moves and avoiding the FOMO. So that is the key. If there is one takeaway from all of this, is that you need to just be objective. So, if I turn on that TV behind me, I'll hear analysts all day long. One guy will be bullish, one guy will be bearish, and they sound very intelligent. They make a very cogent case. I could, buy and sell based on either one of those things. And that goes on all day. But to me, this is the only thing that counts. The market is always right. It's the only thing. And so, yeah, you're carried away here. If you're looking at a 10-minute chart and you're seeing this go, you go, this market is going straight up. And, now it's here. Now you've missed all this. Now you don't want to miss that. And now it's down here. And so, to me, you've got to look at the entire picture. And this to me is what I call the governing pattern. So this is going to govern or dictate, where things are going to go. So yeah, you could certainly get rallies, and I'm sure tomorrow you'll get a rally, and I would just sell into that again. So it's all about being very clear and objective. Don't listen to people in forums. Don't listen to people, high-priced analysts on TV that get paid $1 million a year to tell you what to buy or sell. They have all kinds of conflicts of interest, and they usually don't know what they're talking about. Vivek says, what time frame do you trade? That's a good question. So remember, my objective is to take out the bigger pieces in the market. So if I see a double bottom like this, I want to take out that kind of move. Goes from 320 to 380. I want to take out a piece of the middle of a big move. That's really what my objective is. Take out, a nice chunk of a healthy move. And in order to do that, you can't be looking at a 5-minute chart, because what you see on a 5-minute chart, doesn't give you the ability to withstand something like that. If I looked at a 5-minute chart today, I would have gone nuts. So you can see this was the 5 minutes this morning where it opened, it went lower, and then went straight up 500 points and just kept going up, just gapped, kept going higher and higher. And yeah, it was horrible because I bought these puts on Friday. The market opened lower. I was making a whole bunch, and then I just see it all disappear. But when it got up here, I actually bought more puts. I just said, you know what? It's not going higher. But the point is, if you're looking at this on a 5-minute chart, very difficult to not want to get FOMO, not want to get, not get scared out of this thing if you're short. So that's why you can't. So basically, I look at the longer duration time frames. So that's daily, weekly. So when I look at this weekly chart, you can see that we have now pretty well established trend line here. And we're right about to retest this bad boy right here. And, you can see every time it hit this thing, it bounced, but I don't think it's going to bounce the next time. I think once you come through, you could clear through. Maybe you get a fake out. It could do all kinds of things, but, I look at all of these things and, so, you've been trading in this channel here. You got to the top of the channel, and I think that you're basically going to break through here. So that's the weekly horizon, and then is the monthly. So they all tell you a story. Very difficult to kind of trade a monthly because, it takes a whole month to trade, but, certain levels start telling you certain things. So when it got here, it made what we call this key reversal. It made a new high, last month, but by the end of the month, the sellers were in control. But, as I said, one bar doesn't really make, a trading decision. You can see you made a, key reversal here. It went lower and then went right back in the direction from when it came. So this is still a big, bad uptrend until proved otherwise. It remains so. So you can't just look at these things in a vacuum, but you can see how, it provides perspective in certain areas. So again, what I'm trying to do is try and put a picture together that tells me how to capitalize on big moves in the market. Chimmy says, do you at least look at the fundamentals of what you're trading? No, very rarely not. It'll just mess you up. Price is the news. Price is all you need. So, once I'm in, I just look at trades from the perspective of, risk and reward. Trying to think of a trade that I really, sometimes trades get into this area where the risk is so small and the outcome is so big. And I'm trying to think of a recent trade. I did a bunch of them where I got in where I literally had like a $1 or $2 risk for a huge up. So this is just, Netflix. So I did a trade this month, last month, where literally I felt like I had no risk and a huge upside. So yeah, it was right about here. So this is the stock of Netflix, NFLX. And I do a pre-morning program called the Boiler Room. And, I look to exploit moves. Sometimes in the pre-market session, stock will be down $2 or $3. And then by the time it opens, it'll open up $2 and you'll never see that low again. I very often buy things, and you never see that price again. Or I sell short and the thing just drops and you never see the price. So in this area, you can see that Netflix was kind of dropping like a stone. Kind of, came up to this area here and then dropped. And I was buying it right on this day, right here. I actually bought a little bit earlier in the pre-market. Now, why was I buying Netflix right there? And you can see it just went on a monster move after that. Because I was looking at, I should probably look at the weekly actually tells you a bigger story, but there's enough of a story right here on the daily. So right here, you can see this double bottom. two lows in the same area, but what really whets my appetite is also confirmed by the price action. Made a new low, close at the high. Made a new low, close at the high. So you have this double bottom and these two key reversals pointing. So the market actually points in the direction it wants to go, but like the magician, sometimes it just takes a little longer before it gets to where it's pointing. So once I kind of understood that the market bottomed, so I was looking both at this double bottom right here, as well as this rounding bottom. And they were both connected by this common neckline, which again is simply a line that is drawn through the entire pattern. And so you can see this basically confirmed the breakout. Now, very often prices will break out and then retest the neckline. And then when it goes and makes a new high, then you know it's good, which it did in that case. So, after earnings came out here, the stock dropped like a stone. But to me, that just represented an opportunity because I felt the bottom had been put in. And if a bottom has been put in, no matter how bad it looks, by virtue of the definition of the word bottom, it means that it can only go one way. It can only go higher. So once I understand the pattern in the market that's governing or dictating the price behavior, then, it can do all kinds of razzle dazzle. But, I understand to get in. So it was right in this area here where you had, my inside day bar. Again, this coil, just like Beyond Meat, I was buying it right here at about $521 and took it for a healthy ride on the upside. So I forgot what the question was, but I went on a tangent. Where I think Bank of America will go. Again, I'll look at the price action. I don't really look at applied volatility. I just look at price action. And you can see Netflix, kind of made a new high, closing the low, and it's starting to form a bit of a top up here, a resistance area. So, I'm out. I'm not necessarily short, but I'm out for now. So I'm not going to check a whole bunch of trades today. I could check thousands of trades if you all asked. So I'm looking at a YouTube comment on the weekly trading channel. Hi, Mark. Thanks to you. I'm controlling my feelings. I sold Zoom at $296.88, and it's now 450 pips in my favor. So Zoom is something that I've been very bearish on for a long time, and I'll basically end it on that note. To me, there's 1,000 patterns in Zoom that were telling you this thing was going to go lower on the weekly and really the daily. Just add to this. So the patterns were telling you, despite all the hype in this stock, it provides a very valuable service. And I always feel a bit ironic that I use Zoom services to talk to guys like you, and yet I've been telling you to short their stock. So the value of something and the price of something is, two different things. The market will determine what this thing is going to be worth. And to me, there were 1,000 bear price patterns in this thing. Here's the double top. Here's the head and shoulders. So right there, it told you this thing was over. Here was another intermediate double top. And then lastly, there was one here. And I was saying to these guys, get short. This was the day before the news release of earnings. They released earnings and the stock dropped $50. But to me, it was no secret as to where this was going because of the, number of bear price patterns. And you can see this has also formed a long-term descending triangle. And now we've broken below the low of that. So I think this thing will be cut in half from here. So you can see the trading channel shorted at $296 and is making $43. based on my analysis. So good on you for taking it, and good on you for the discipline to stay in it. So I will stay in something as long as it will have me. You can see this has done nothing but go down, and it will do nothing but go down. So you're welcome, Trading Channel. I'll talk about gold tomorrow. Napoleon says you need to be my elite trader. So, we'll talk to you all about that. The elite is my daily program. I send out trades every single day based on what I think. So Frank says, what do you advise to a beginner? I want to be your student. So, Frank, at the end of this, our team will get in front of you. We have all kinds of things depending on where you want to start. I do a Friday session where I analyze all of the markets, and then you get to ask me, all the markets you want me to look at. It's about an hour and a half, 2 hours, where I look at dozens of different markets, explain why I'm looking at certain things up and down. I have a daily email. I have a weekly email. So depending on what you want from me, our team will be in touch with you. So Duncan says, wait, it will be exposed at the end of the 4-day trading session. So, but thank you for asking. Joe says, what about the gap in ZM? Does it have to be filled? No, I don't look at gaps, that have to be filled. That looks like a breakaway gap. Some gaps get filled. There was a big gap here. You can see it did get filled. Some gaps do not get filled. And I don't think that this one will be, not for years. Maybe eventually it'll go to $100 and then one day we'll see it up here. But I think it's going a lot lower first. I think this thing's going to get cut in half. John says, thank you. Mark, great as always. You're welcome. So again, tomorrow we'll keep reinforcing this. I'll keep going through trades, new trades each day. Tomorrow I'm going to talk a little bit about risk management. I'm going to give you a position size calculator so you're going to know exactly how much to, risk on your trades. And we'll talk about that tomorrow. And Marisa says, thank you. Great as always. You're welcome. Joe says, thank you. I joined the elite. So Joe, thank you for joining the elite. And thank you all for your support. Mark says, thank you. Jerry says, what an amazing session. Thank you, Mark. So again, this is all, and again, the departure of what I do versus, again, most of what you'll see out there is that I refer this to a clean or a naked chart. So let me just remove all my muck on here. So just like Graham Loving, a little bit more, but there's nothing on this chart. There's, no volume. There's no MACD. There's no moving averages. There's no Bollinger Bands. There's nothing. There's no what we call lagging indicators. I just look at this picture of price and time. And frankly, it should be irrelevant what the instrument is. Actually, the best thing to do is just wipe out what you're looking at here. So I should be able to look at this chart. I don't care if it's corn or pork bellies or the euro versus the yen or whatever trading instrument. I will use the same tools in my toolbox to analyze. The first thing I say to myself, what is the trend or direction of this thing? And I think if I asked a 6-year-old, what is the direction, drop from 500 to 250 or 600, I think we could say the trend is distinctly lower. Once I understand the trend or the direction, then I look for patterns that get me in sync with the move. Here's the double top, the head and shoulders. So once I understand that, then I look for the key reversal, made a new high, close on the low. And this has just been a slow drip lower. So, you just have to be in it by now. You can see you kind of have a bit of a reversal here. So it hasn't been any classic key reversals, but the last couple of days, these are all just small inside bars. You can see it's just coiling down here where the range, the daily range is one inside the other. It's just, been this coil, this storing of energy And I think it's just going to uncork in the direction of the trade. So once I kind of understand, what, I call my insurance day bars, pattern, direction, insurance, then the way I get into this thing is just put simply a sell stop right under that low. And if the market takes off tomorrow, beautiful thing is you're not triggered. So I let the market do all the work. If the market wants to go up and then trigger me, I don't have to, stay up till 4 a.m. till my eyes bleed, wondering, when some 15-minute crossover is going to work in my favor. I'm just going to let the market put me in, and then I'll put a trailing stop loss behind it and let this thing do its magic. Weekly Trade Assist. Thanks, Mark. You are the man. Thank you. All right. Antonio said, I just started my journey with you to take my $5,000 account to 200K. So hopefully we can do it. Just don't try and do it in a week. All right. I will see you guys back tomorrow, 4:30 Eastern Standard Time. Thanks a ton for checking in. We had 190 people on this and many more on YouTube. So phenomenal turnout. Thanks a ton. And I will see you tomorrow.